this is Vic from GraspingTheMarket and welcome to our market briefing. Today we had no change on the larger time frame as we had an inside session, so the monthly remains developing as a candle that is returning to the previous 4 month range, and on the weekly, obviously no change. We can see the inside session, the gap from Monday still remains in place. And it does the daily excess left on Monday, and it has not been confirmed. We need to take that Monday high and start eating into this gap for that excess to be confirmed, but it is there. When I have a look at the market profile, there is a peculiarity. Well, first of all, we had a huge bounce, positive sentiment during the overnight from Monday to Tuesday, and the theme of today's session was that overnight gains were held. One important thing is that from Monday we had an afternoon high mark here on this M high at 28.51.50. And today, there was a lot of impetus in the morning to sell, and that level was the one holding the ground. After they couldn't take it there, then the market started slowly going up. So the important things here are the following. You can see that the D low is exactly at the Monday's POC. It's a very mechanically traded reference. And one important thing to notice is that although the upper side of the overnight and the gains and the level denoting change, basically we held those highs and all this area 28.50, 28.60. The participants driving the market were clearly short-term oriented. You can see the week low exactly at a reference, then the E low, they bought it exactly one tick above the D low, then you see the G low one tick below the key reference, the H low one tick below G halfback, then the I low exactly one tick above the open, then the J low exactly one tick above the I low, and then the M low exactly one tick below the L low. All of those, you have 1, 2, 3, 4, 5, 6, a total of 7 lows. That leaves a very questionable and weak structure on the way up. So at the end of the session, although a lot of the excess from Monday was taken, it could not take it all, and it could not get into the gap area that was left there. So there are two possibilities. Either the market got too long here, and this is we sometimes we see poor highs and lows when the market the inventory gets imbalanced. The other possibility is that you have short-term money as well selling exactly from the reference. I'm not pretty sure. I'm not in a position to say which one of those is the one that we have here, but what is clear to me is that the buyers are short-term oriented, and if they don't get what they want, which I presume is an extension above the Monday high, this structure is very vulnerable and is at risk. So overall, the value was overlapping to higher, but yeah, it couldn't take the high. So the important thing to keep in mind is that we have an incomplete auction on both sides, and that increases the odds that in the near future we will trade at both sides of this profile. So the immediate focus for tomorrow is on value development relative to this afternoon range. If we get acceptance above the high, that increases the odds that we will take the Monday high and get into the gap. If we get acceptance below the M low, that will denote failure of this auction up, and they will bring into play all those weak lows and along the profile. One important thing to say is that, as you know, an inside bar is a form of balance. So after the huge move down, it seems that the market is finding balance here. So if we get out of this 2-day balancing range, that will constitute a break from balance, and it's likely to go in that direction. My preference, I don't think that after the market moved 200 points almost in a single straight line, it's gonna be done already to the downside. So I would, as I said, we have a possibility of trading at both sides. If we break, sorry, if we break the highs and we start eating into this gap is pretty massive, and you also have the moving average there, the 100-day moving average, and the 2900 area. So if we break to the upside, I would wait to see what type of continuation we get to the upside, because there could be a possibility that we break to the upside, we have a lot of resistance here, and we re-enter the range. And if we do that, that will create a situation in which we fail to break from short-term balance, and the destination will become the lower side. And that will be I think that will be the better odd play. So my view is, let's wait to see how we break into this short-term balance.